And it's the final one for the week. Great to have you join us on Business Morning live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening with the price of oil there. We see oil prices climbed today, extending sharp gains in the previous session as the frigid weather swept across large swaths of the United States, threatening to further disrupt oil supplies. Brent crude rose 34 cents to $91.45 a barrel after rising $1.16 on Thursday. It's back above $90 at the moment. U.S. West Texas Intermediate crude rose 46 cents to $90.73 a barrel, having gained about $2.01 the previous day to settle about above the $90 mark for the first time since October 6, 2014. Both benchmarks are headed for their seventh straight weekly gain. A massive winter storm swept across the central and northeast United States on Thursday, where it was delivering heavy snow and ice, making travel treacherous, not impossible, knocking out power to thousands and closing schools in several states. Back at the Minister of Finance, Budget and National Planning, Mrs. Zainab Ahmed has announced that a total of 3.4 trillion naira has been spent on capital expenditure as of November 2021. This amount represents a 74% budget performance when compared to the total capital budget of over 4.5 trillion naira. The finance minister was speaking in Abuja at a symbolic presentation of sukuk checks to the beneficiary ministries, explained that the latest 250 billion naira sukuk will be released as part of the capital expenditure in the 2021 Appropriation Act, which has been extended by the National Assembly to March the 31st. Earlier, the Director General of the Debt Management Office, Mrs. Patience Unia, had reiterated the multiplier effect of the infrastructural projects to the nation's economy. The Nigerian Exchange Limited says it is set to build on its digital momentum and position itself as Africa's preferred exchange hub. The NGX Chief Executive Officer, Timi Popola, who made this known during its annual 2021 market recap and 2022 outlook, explains that some of the ways to ensure the growth of this year would be to strengthen strategic partnerships, integrate the use of technology vertically across the value chain while working to increase listings in the market. All right, so after the break, we look at performance of Nigeria's capital market and activities on the Nigerian Exchange Group. That's in a moment. To stay with us. All right, now to our first conversation to discuss the performance of Nigeria's capital market. We have Mr. Olatunde Amolegbe, President, Chartered Institute of Stockbrokers. Great to have you. Good morning.
Thank you, Ladi, for having me. I'm happy to be here.
Oh, yes. On a Friday morning, you gave us your time. Well, what are the key, highlights, of the performance of the NGX Limited in 2021 for you?
I believe the NGX did pretty well last year. Obviously, the sort of returns we saw last year was not as bullish as what we saw in 2020, but was still pretty good. 6.1% on the broad index, the ASI. But like I always say, the ASI does not necessarily tell the whole story. If you dig deeper, the more specific index, such as the NGX growth index, showed returns in excess of 28%. So, meaning that investors that are in that sector of the market, were able to beat inflation by a long mile. So, all in all, it was a good year for the NGX, and investors in the market.
Yes, not a bad one. But, aside from the key statistics, what other major milestones did the NGX cross last year as a newly demutualized exchange?
The demutualization itself was a good one. It shows that the NGX is moving in the right direction, that, exchanges generally are moving. So we have the exchange itself also listed, on its own platform, and they're able to do a few things that they've not done they would typically have not been done as a company limited by guarantee. So that's a good one. I think that with the fact that we were able to hold the first digital IPO in the market was a big deal. It was one that we at the CIS has always championed, and we supported the NGX in that. It was pretty successful.
Yes, and I also heard that women participation was high with that.
Oh yeah, which is very good. I mean, this is the sort of inclusiveness and increased participation we have also sought across genders, across demography, and across the type of investors we like to attend towards the market. The truth of the matter is that prior to the digital offer, the average age of investors in this market was probably in the region of 50. You will agree with me that 50 is not exactly a young age. We need a country like Nigeria that has a relatively large youth population. We need more of those youths to start coming into the capital market. So to see the number of women that have participated in that offer, the number of youths that have participated in that offer, gives us a sign of progress in the market and a sign that the future is looking bright for the Nigerian capital market.
I know we keep talking about attracting millennials to the capital market. Tell us about what your institute is doing regarding this.
The truth of the matter is that the millennials are actually participating in the capital market, but they are just not participating in the sort of numbers we expect for them to participate in Nigeria here. We know that with the hubs, with the global hubs that are available now, they are able to buy stocks, internationally. With the digital offer, we see that the interest in the local firms, if the good firms come into the market, is there. What the CIS is trying to do is to tap into that by increasing, financial literacy across various platforms, through schools, through digital platforms, through the social media. So we're trying to get the youths, to get to know more about the capital market here in Nigeria. We have a relatively sophisticated market here. They could, that could enable them accumulate savings and put those savings into profitable investments. Beyond them participating as investors, we will also need them to also come in as practitioners in this industry. We need youths to get interested in becoming securities and investment practitioners. So that is why we are collaborating with some universities now to float bachelor's degree in securities and investment. So school leavers could now go into universities and graduate with bachelor's degree in securities and investment, and that could serve as a pipeline to them coming into the profession. Secondly, we also realized that the time it takes to actually become an omnibus stockbroker could be relatively long, and because of that, we've broken down the qualification into specialization, such that if a young man's interest, for instance, is in the equities market, they can come to the institute and specialize in that. If the interest, for instance, is in fixed income, they can specialize in that, and they can, take the course, do the tuition, and then pass the exams and become a player in the market in a relatively short period. So those are sort of the things we are doing. Of course, we have also ensured that we made it easier to actually take our examinations. So, for instance, you cannot take our exam on a remote basis. So if you are living in Canada, you are living in the US, you are living in Britain, you do not need to come all the way to Lagos to take our exams. You can take it from the comfort of your bedroom, as a matter of fact. So, we've done all of that so that we meet the youths where they reside, which is in the social media, on the internet, and in the comfort of wherever they have, because they do not want to go through the hassles of having to move from one point to the other to get what they want to do done. All right, so we have leverage on technology, we leverage on the knowledge we have to try and ensure that we get more of the youths interested in the profession, both as investors and professionals.
Yes, and we know, there's a relationship between the capital market and, economic growth. But what are your recommendations to the government, to help, tap into what the capital market can actually do in helping to revamp the economy?
I know that the government has been doing quite a bit, by raising bonds in the capital markets in order to carry out some of the objectives. But I also note that the National Development Plan, the 5-year National Development Plan, emphasizes the development of infrastructure, the creation of employment, and tackling climate change. If the bulk of those activities surrounding those key policy areas can be financed through the capital market. And we've seen it. We've seen that the capital market has capacity and the innovation necessary to be able to finance those programs. I mean, the last sukuk that was issued by the government in December was oversubscribed 8 times. That's an indication of the capacity that this capital market has. So if the government works with the players in the market and good innovation is brought to bear, the capital market can provide significant financial outlets for government to achieve its objective under the 5-year development plan. So, for instance, I expect that the pace at which privatization is going on should be wrapped up. It seems to have tapered a little bit in recent years. They should wrap that up. The commercialization and privatization of other entities, such as the power sector, such as the petroleum sector. Some of those could come through the capital market, and I know that if that happens, not only will it develop the capital market, it will also help the government meet its funding objectives in an efficient and costly manner.
Quite interesting.
Cost-effective manner. Pardon my language.
Okay, so give us some, insights, into what investors and shareholders, can expect from the Nigeria's capital market in 2022.
Well, 2022 is shaping up to be a very interesting year indeed. We'll see the NGX have already done close to 10% gain this year. We think that the prospect for further gains and growth is there. If all things being equal, if we are able to achieve relatively stable macroeconomic policy, if the security situation in the country improves, if we are able to put in more, if the security situation in the country improves, if the forex situation also improves, that could also attract some of the FPIs that might have left the market. If the electioneering campaign we're going into, is conducted in a relatively peaceful manner, all right? And if we continue to recover from the impact of COVID, God forbid, we do not go into another round of relapse of COVID. If all these factors work in our favor, then we are likely to see a very good year in 2022 for the capital market. We've already started seeing the green shoots of that. The corporate results that have been released recently have been quite impressive. And I think that, as long as consumer demand continues to grow, capacity continues to grow for in the companies too, and they continue to do well, then there's no reason why the stock market should not have a blockbuster year. Right, I also feel that some of the steps that is being taken by the NGX itself are also very positive. Trying to attract the fintechs to come to the market is a good move. launching the derivative market is also a very good move. So all of these issues combined, if they work positively for the market, should let the market end the year in a very positive territory.
Right. Talking about, ending positive territory, we've seen, inflation rise globally, and, we anticipate further rise this year. Which sectors of the economy would you say investors should take position to, hedge against inflation?
There are sectors, specific sectors that at least have shown in recent years to be sort of immune to inflation, because the companies in those sectors have a relatively better capacity to pass along increased costs to their customers. So the telecom sector, for instance, we know is a fast-growing sector. It's a sector that has the capacity to be able to beat inflation. The consumer goods sector, has also shown over the years a capacity to be able to withstand inflation, because the ability to pass on cost is much better in that sector. I will also argue that the cement sector, where demand in Nigeria at least appears to be relatively inelastic, also has a better capacity to be able to withstand inflationary pressures. So, off the top of my head, those are the sectors I can mention now. I will encourage your viewers and investors generally to talk to their stockbrokers more closely about details of the companies and the industries that has the capacity to withstand inflationary pressures.
Yeah, quite interesting, because 2022 is shaping out to be the year of inflation, the way it's looking. But let me get your, briefly now, let me get your perspective on the plan by the SEC to revisit the capital market 10-year development plan. Briefly.
I think it's good timing to do that. The capital market, the existing capital market plan, I've run for a while now, and I think that a lot of the objectives that are itemized in that plan has been realized, But the world is changing rapidly, and it keeps changing. I think that it is important that the capital market also changes with it. But what I've said initially is that the new plan that is being planned must ensure that the capital market, there's increased efficiency across board in the capital market, either regarding timing, either regarding operational efficiency, either regarding pricing efficiency generally on the financial market. So it has to increase efficiency across board, across all metrics in the capital market. And if that happens, what the result of that will be increased competitiveness, because obviously the world is a global market. Investors will direct their money towards the markets that guarantees them the best return for their risk. And so those barriers, those country barriers, essentially do not exist anymore. So our capital markets also needs to be as efficient as any other in the world, in order for us to attract capital, either locally or international. So if we're efficient across all these metrics, competitiveness will increase, and we should be able to achieve the objective of the new capital markets master plan.
Okay, thank you so much, Mr. Olatide Omolegbe, President, Chartered Institute of Stockbrokers. Thank you so much for coming on the program, and enjoy the weekend.
My pleasure, Ladi. Thanks for having me.
Thank you. All right, after the break, we see FIRS resumes collection of income tax on bonds and government securities. We analyze the expected impact of this after the break. Do stay with us. This is Business Morning. Welcome back. Still watching Business Morning. To our next conversation, now we see the Federal Inland Revenue Service says it will start collecting taxes on income derived by companies from bonds and short-term securities. In a statement, the FIRS explains that companies will now pay taxes on profits from loans given to the government effective from January the 2nd. having been exempt for about 10 years. The FIRS therefore urges taxpayers to comply by including such income in self-assessment returns and tax computations. All right, let's bring in Omotola Bimbola, investment analyst with Chapel Hill Denham, to drill down on this. Great to have you. Good morning.
My pleasure, Ladi. Thank you for having me.
Yeah, so quite an interesting development here. We see in 2012, the federal government had exempted bonds and short-term government securities from income tax for 10 years. What was the reason for this exemption in the first place?
Okay, thank you for the question. When the exemption was granted about 10 years ago, I think the objective was quite clear. It was to deepen the capital markets by encouraging a broad-based participation in the markets by foreigners, by local investors, including institutions, corporates, individuals, and of course, institutions as well. Now, I mean, for corporates and subnational governments, when they are considering their capital structure and ways for them, to raise capital, they usually have a number of options. They could raise equity security, particularly for corporates, when they want to embark on major capital projects or when they need capital for working capital requirements. They could also approach banks, to borrow money, and they could come to the capital markets as an option as well to raise debt, to issue debt securities to a broad-based, number of investors. Now, when you are considering all these options to optimize your capital structure, tax is a very, very key consideration, right? And when the question was granted about 10 years ago, what it did was that it created a tax-efficient way for investors to participate in the capital markets. And that, in turn, also created an incentive for more issuers to come to the capital market, particularly, corporate issuers as well as subnational entities, which we also call, state governments. And if you look at the growth and development of the capital market over the past 10 years, you would see that, we've actually reaped the benefits of all this. We have had, much more diversified corporate issuers in the markets. We now have more subnational entities participating in the capital markets. The size of the debt market itself, it has, conveniently outperformed the equity market. Market has now grown to, well more than 20 trillion naira, of outstanding securities, if we include Eurobond securities. And, 10 years ago, we had barely a quarter of that. So it's been a success to a very large extent, the impact of that policy 10 years ago. And that's why, it's very sad to see that, this exemption is now being removed.
And with the expiration now, do you, by any chance, see if there'll be some kind of extension?
That's very tough to say because, as we all know, the federal government is on an aggressive revenue drive. If you look at the fiscal numbers that we've seen over the past, 3, 4, 5 years, they've been pretty disappointing. Fiscal deficits, has now become normalized at 4% of GDP compared to the fiscal ceiling of 3% of GDP. Debt servicing cost has become a burden, eating up nearly 100%, of government's revenue. So, and the government has a plan, rightly, to find a way to grow Nigeria's tax revenue from roughly 7% of GDP to 15% of GDP in the short to medium term. So very clearly, the federal government is on an aggressive revenue drive, and that's why it's very difficult to see whether to see the possibility of the government actually renewing this exemption from a broad-based perspective. But what I do think that we will likely see in the short term is that we could see subnational entities, the state government, actually coming out to protest, against this policy, because for them, they could argue that the federal government already enjoys a lot of benefits, being the highest rated and the most risk-free borrower in the economy. And also, the federal government also has, an existing credit line with the central bank at any point in time to finance their operations. Meanwhile, state governments, they're having it very tough. But by the time you remove Lagos State and a few other states such as Akwa Ibom, Rivers, Kano, many states are struggling to meet up, with their recurrent expenditure, talk less of capital expenditure. So they might come out to protest, and actually seek for an exemption to be granted to subnational debt securities, state government securities, so that they could be, on the same on the same on the same wavelength with the federal government. I mean, if you notice, by the new policy that came out, federal government bonds will still be tax exempt. It is only short-term government securities such as treasury bills and promissory notes that are taxable. So the subnational entities, the state government, will also likely come out to protest against this policy, so they could also be granted an exemption.
All right, is this in line with, global practice?
It is in line with global practice, actually, because, I mean, if you look at several tax jurisdictions, particularly the ones we like to look up to, many of them actually grant municipal bonds, which are essentially what we call state bonds in Nigeria here. They actually grant them exemption, tax exemption, which is a way, for them to ease the financing burden facing state governments that face a number of challenges, and to also find a way to encourage the buy side investors to actually buy municipal debt securities, such that states can always have access to financing lines in the capital market. So I do believe that it's actually best practice to actually exempt municipal bonds, and that's one thing I do expect Nigeria state government, through the NGA particularly, to protest against.
All right, and this would, obviously raise, cost of borrowing for issuers. But how would it affect, market liquidity in the short and midterm?
So what I do think is that, already corporate bonds and municipal bonds in Nigeria, they are barely liquid. They are not that tradable in the secondary market. And now with corporate bonds and municipal bonds now being taxable, what we'll likely see is, a further dearth of liquidity in that particular segment of the market. While the federal government's, FGM bond market will remain, very, very dominant in terms of liquidity in the secondary market. What we'll also likely see, particularly in the primary markets, is that corporate issuers and municipal issuers, will also likely begin to actually consider the taxable nature of their securities in the pricing of these debt securities in the capital market, because more and more we are going to see the buy side investors, particularly corporates, who are actually affected by this policy, come out to demand for a higher premium, a higher return premium, to compensate for the taxable nature of that security. And one of that thing we also probably see is that we might see investors now begin to express more preference for FGM bonds, which are not taxable, compared to treasury bills and promissory notes, which are now taxable. So definitely it's going to impact liquidity in different segments of the market, and it will shift the focus of investors more to the non-taxable debt securities, in this case, which is federal government bonds, compared to the taxable ones like promissory notes, treasury bills, corporate bonds, and municipal bonds.
All right, well, will this new levy imposed by the federal government, would it capture considerable tax earnings?
So when you actually think about it, the first way for you to answer this question is to first understand who exactly is going to be taxable by this policy. Now, the exemption order that expired affects only corporate buyers of debt securities. Pension funds are completely tax exempt based on the Pension Reform Act, so it's not going to affect them. Individuals are not going to be affected because there is an existing personal income tax exemption granted to income earned on fixed income securities, and that one does not have any sunset clause. So individuals are not going to be affected. So who are the people that will be affected? It is mainly corporates, as well as funds as well, that will be mainly affected. And when you look at the contribution of these two people to the entire size of the capital market, it's actually quite minimal. Because we have a market that is heavily dominated, a debt market that is heavily dominated by pension funds who are completely tax exempt, And then maybe on a secondary basis, we have, corporates, as well as mutual funds, who represent perhaps less than 30% of the market. So in terms of, the possible tax earnings from the government, this is not a tax that's going to generate 100 billion for the federal government in its first year of operation. No, that's going to generate, based on a poor tax scenario, less than 50 billion, per annum. So we cause to question, the rationale, for actually, introducing these taxes when they are not going to significantly, actually improve the tax earnings of the federal government, and then it's going to serve, it's going to be a disservice or discourage, broad-based participation in some neglected aspects of the debt market, such as the municipal segment and the corporate debt segment.
Yeah, because a big reason for investing in municipal bonds is that it's actually tax-free. So obviously investors. How do you see investors reacting now?
Well, for investors, I think, when considering your investable asset classes or the universe of your permissible investments, more and more we're going to see investors begin to segregate those that are taxable and those that are tax exempt. And we're going to see investors begin to favor more securities that are tax exempt, such as the federal government bonds, while the instruments that are taxable, such that the municipal bonds, the corporate bonds and treasury bills, will probably begin to receive, less interest, compared to where we were before, from investors. And due to likely raise borrowing costs, particularly for state governments as well as corporate issuers in Nigeria's debt capital market.
Quite interesting, Motola. Well, we'll keep tracking to see how it all ends. Motola Bimbala, investment analyst, Chapel Hill, Denham. Thank you for coming on the program.
Thank you very much, Ladi.
All right, now for an opening call to the market, we have Anete right there. Well, Anete, we're back at the 47K, above it.
Yes, good morning, Ladi.
Morning.
We're back and above the 47,000 points of the all-share index at the Nigerian exchange. But I'll give you that details first, just shortly after I give you the details about the fixed income market. Let's get started with it. Okay, so for the fixed income markets, well, the fixed income market is still not too much of activity there. A little bit of improvement in contrast to what we had on Wednesday, but still mixed. Average yield there is still at around 11.5%. But this is what it turned out at the close of Thursday's trading session. 2 deals were recorded across the 22nd of March 2035, 22nd of January 2026, as well as the 18th of March 2036 paper, while the 23rd of February had just one deal. That's 23rd of February 2028 had just one deal. Total was 8. So that's as far as that market is concerned. And of course, we also had some liquidity, absence of liquidity in the market. So flipping over to the Treasury bills segment of the fixed income market, it also continued with mixed trading sentiment. And then at the same time, average yield there is still unchanged at 4.4%. But when you take a look at what we have here on the board, the 26th of January 2023 had the highest number of deals there. The discount high is at 5.32%. The total value there is 2.50 billion naira. It was seconded by the 25th of August 2022 paper, which is coming later this year. It had 2 deals worth about 2 billion naira. In all, total number of deals carried out in that segment was just about 7 and worth about 6 billion naira. So elsewhere within that market, we have the open market operations, which the average yield there is also unchanged at 5.5%. Now take a look at how it turned out at the close of Thursday's trading session. We had just 2 deals from the 22nd of November 2022 paper later this year, and then all the rest had just 1 deal. Cumulative 6 was the number of deals carried out in that market. Over to the central bank special bills, not much of activity there. We had just about 2 at the close of Thursday's trading session. But the highest deals went for the 30th of March 2022 paper of that segment. And then it turned out about 26 billion naira in value, and then the total number of transactions in that space was 20. So now to give us more, to have more perspective on the fixed income market, let's talk to a fixed income dealer at FSDH Merchant Bank, Caleb Alimi. Thank you for joining us, Caleb.
Thanks for having me.
Yeah, thank you. So yesterday we had, there was OMO auction by the central bank. Can you bring us up to speed with what happened at the markets yesterday?
Okay, I mean, the OMO auction yesterday, in the course of the week, there was about OMO maturities of around 100 billion. But the CBN floated just about 30 billion across three maturities, the short end and mid end, and then the one-year paper, like 355 days. They sold a total of 30 billion as they offered, but subscription was over 200 billion, about 230 billion was what subscription was. The rates have been, unchanged for a while. It closed at 7%, 8.5%, and 10.1% for these three maturities. We expect to see a bit of demand for those papers in the market today, given the fact that there's still a bit of liquidity. There's a lot of possible liquidity in the system. System liquidity is actually high, and then they'll be chasing after some of these securities.
Okay, so now there is the end of the week. Do you see investors still putting their focus in any of the, which of the markets are they really putting their interest in the fixed income market? Okay,
so given the fact that, it's a fresh, like we always say, it's a new borrowing program for the federal government, investors actually expect higher rates this. So we've seen more interest in the short end of the curve, short-dated securities. So you have people investing in the April paper, in the May paper, keeping cash dry or cash very good in anticipation of higher rates in the course of the year. So we've seen more interest in short-dated papers, and we expect that to continue, pending when the rates actually begin to trend upwards later on in the year.
Okay. Thank you for that analysis, Caleb, and then we also will look out for how the market turns out at the close of Friday's trading session.
All right, it's very interesting. We'll get more with what happened in the equities market after the break. We'll drill more on market analysis. Just stay with us. This is Business Morning. All right, still watching Business Morning, and we're still drilling on the markets now. Anita, how's the equities looking?
Well, Laddie, I'm just a journalist, but I can only tell you what happened yesterday. But we will be having our equities market trader to tell us how the market is looking at. Right. But this is, but this is how it turned out at the close of Thursday's trading section. Back in the green and back up and above 47,000 level. This is how it turned out at the close of Thursday's trading session. And that translates to about 215.08 billion naira in the total value of the equities capitalization. And at the same time, it has increased the month to date is up 1.58%. Year to date, 10.8% was still, in the new year of 2022. This is how the sectoral performance chart turned out. That gain came largely on the back of investors' interest in Dangote Cement, which lifted the industrial goods counter by more than 2.6%. At the same time, other counters except the consumer goods sector of the NGX were down. But at the end of the day, it was green for the sectoral. But in terms of value, volume, and dues or overall activity, it was down. Value was down by 20.29%. Volume was down by 20.29%. Value was down by 38.75%, while the deals carried out was down by 15.75%. So that is how the market turned out at the close of Thursday's trading session. But now to give us more details about how the market is turning out in the early hours of trading session at the NGX, let's talk to Mohammed Kaide, who is a stockbroker and head of dealings at APT Securities Limited. Thank you for joining us, Mohammed.
Good morning.
Okay, so can you bring us up to speed with what's happening at the NGX, the trading, as far as trading is concerned?
Good morning. The activities in the market is still low. Market just opened about 46 minutes ago, and we have had a trading of about 534 million units of shares being traded as it is now, and we have daily volume still stand at 60,167,193 units of shares that has been traded as. So the market is still I don't think might close today. We may likely see a continuous rising in the market by the time we are going to we close today's session. So as we have it, currently we have ASI still trading around 47,200 200 units basis points. So that is what we have as it is now.
Okay, so one more question before I let you go, Mohammed. We've seen, as of yesterday, the share price of Oando was the highest gainer in the list of 23 advances on the NGX. And this is coming on the back of reports that the company will be holding its first meeting since 2019 after the SEC had barred it from doing so. So what's the share price of Oando doing at the moment?
At the moment, the share price is still trading, is still 5 naira below the closing price of yesterday at 5 naira something. So I don't expect it's going to close this down. I believe that the bullish run in the stock can also still continue for today. Because of the fact that if you look at what is happening in the oil sector, you see that looking at the implementation of the PIA, Petroleum Industry Act, that has been started being implemented, and is going to accept the sector completely. And you can see what happened in Seplat too. Seplat as a last week was trading around 600 naira, and as we speak today, it's around 900 naira. So I believe that in the sector we are going to witness this again. The Oando also has its own information within, as we know that they are starting to release their results. Mind you, they have about 3 to 4 year auditor reports to submit, and this may likely make the stock to move in the positive territory.
Thank you for that wonderful analysis, Jamiu Mohammed, and we definitely will keep our eyes for the market's performance, especially as we near the close of Friday's trading session. So that was Jamiu Mohammed, the stockbroker and also the head of dealings at APT Securities Limited.
All right, Nita. I don't know why I feel pumped for today's close. I feel like it's going to close with a green. I don't know why, but we'll see, Nita. Thank you so much for that.
Thank you, Ladi.
All right, let's look at other markets now. We see the crypto market is looking quite green today. Normally, Fridays can be quite tricky. Mostly ends in the red. But now we're having a green Friday. Let's look at the market cap that we see is $1.76 trillion. It's up about 3.34% this morning. Volume traded in the total crypto space, $66.62 billion, down about 3.20%. And we see dominance there, 40.92%. Price of Bitcoin now, we see it's $37,997. We see Bitcoin stayed above the 36,000 support against the US dollar. See Bitcoin now rising, but it could face hurdles near the 37,800 and 38,000 resistance level. See Bitcoin started a decent recovery away from the 36,400 zone. Price is still trading below the 38,000 mark at this point, below the 100-hour simple moving average. Well, Ethereum there. Ethereum's looking quite good, $2,789, up about 4.72%. Volume traded in Ethereum, $13.24 billion. And we see top pulse by market cap there. See it's mostly green on that counter with Solana, the biggest jumper there, $105. It's up about 7.07%. I've noticed Solana jumps the hardest on that counter nowadays. All right, let's bring in Michael Inaji now to give us some analysis for Friday. Hello, Michael. Good morning.
Good morning, Letty. Happy Friday.
Happy Friday. Happy Green Friday. Great to have you. Well, I see the NFTs market, had one of the best months in January with a record trading volume of about $6 billion, while cryptocurrencies like Bitcoin and Ethereum plunged dramatically. What does this trend tell you?
So basically, we've been in a I would like to think we've been in the bear market ever since May of last year, and you're seeing the resurgence. I mean, the resurgence of NFTs basically be a counter, like inverse to that narrative, and mainly that has to do with a few of the attributes of NFTs themselves. The holders of NFTs tend not to be as price oriented as investors and traders who have a price basis that they stare at every day. So NFTs tend to be very they tend not to be as liquid. Yes, there's floor prices, but if you set a price for an NFT, the characteristic of the person who usually bids and sells NFTs is more patient, and it's more a longer term horizon. And so the reason why you're seeing this NFT growth has mostly to do with the fact that basically the entire crypto space hasn't seen like that much growth since May. And so you've seen people try to speculate in other avenues that is still in the crypto realm. And so NFTs really allow that speculation to run rampant because of the inherent characteristics. People tend to be more quote unquote hodlers. They tend to hold on pieces for longer. It's not the same kind of time preference that you see with people who are, going in and out of crypto positions when they see a 10, 20%, down day. They're more prone to sell versus someone who has an NFT and has a longer time horizon. So it's a mix of, Bitcoin not doing as well and them just getting frankly bored and looking for other avenues to speculate. And
Right.
the inherent nature of the illiquidity and the time to sell an NFT is one of the reasons why you're seeing the volume rise so much is because these market players have to speculate somewhere else.
Yeah, Michael, it's so hard for me to buy, one of these expensive JPEGs right now. But another issue now, I see the hackers are back. See, Wormhole, a popular cryptocurrency platform, that offers bridges between multiple blockchains. It got exploited recently. This is not good.
Yeah, it's not good at all. It just goes to show, when people say that crypto is full of smart contracts, people have to realize that these are like not smart contracts by any stretch of the imagination. At the end of the day, it's just code basically telling. Just code that basically has rules that that could be exploited by human beings. Like we have a long way to go in this ecosystem, and this is something people have to be cautious of. Whenever they're engaging with smart contracts, there is always inherent risk from the protocol itself, not being audited correctly, not being coded correctly. And so whenever people see, yields or whatever the case might be on smart contract platforms, they should be aware of the protocol risk. And so some of these protocols are prone to manipulation because of the open source nature. Anyone can look at the code base of any one of these projects. And, basically the reason why they got hacked is because on GitHub, they posted a fix for one of the bugs. And the hacker saw, hey, you guys are fixing a bug, but you haven't deployed it yet. So I'm just going to exploit it before you fix the bug. And so basically, when you have open source protocols that anyone can see how it operates, you have people tinkering just to figure out how to break it and, make money from breaking those protocols. So there is a lot of protocol risk, and this is something for people to be aware of.
Yeah, I guess you have to be one step ahead of the hackers in the crypto industry. All right, Michael, thank you so much. Enjoy your weekend.
Thank you so much, Ladi. Have a good rest of your day now.
All right. All right, that's it for the crypto space now, and that's a wrap on the program. Thank you so much for joining us for this Friday edition of Business Morning. Don't forget to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Enjoy your weekend.